Good morning, good day, good afternoon, depending on where you're at in the world. This is Wolverine broadcasting out of Ann Arbor, Michigan, US of A, for the Salvation Trading Company, where we teach and train our clients to trade Forex with realistic outcomes using proven price indicators and cross-pair analysis. At any time, feel free to come to our website at salvationtrading.com, where you can look at all of the follow-up screenshots that we've taken on live trades during our webinars, and you can also see our monthly and yearly results on both positive and negative pips. This past week, for February 13th, we took 11 trades in our live webinars. 11 of those were all successes for 238 pips. And then we got stopped out, didn't get stopped out at all on those trades. So the average is per pip trade was 21.6 pips, and these are all scalping trades. So let's highlight one of these from that week, right on February 13th, during our U.S. session. All right, so we'll take a look here where we were able to produce 33 pips. Now there's actually two trades within this screenshot because the time frame is so close, but I also wanted to show how well these resistance and support levels work that we provide our clients. So here again, we talk about the three different indicators that we use, and that's all we use. There's no data feed that you have to purchase. That's an extra cost. There's no magic box, no red light, green light. This is how Forex traders trade, and this is how the hedge fund managers trade. This is how our bank managers trade, using resistance support levels and indicators. These indicators are free from your broker. You could get all this in a data feed with something dressed up nicely, but you could do that and pay anywhere from $300 to $500 extra a month on data feed, or you can get these indicators free from your broker and just learn how to use them, and that's what I teach all of my clients. So we use three specific indicators. One are the resistance support indicators or levels that I provide on a daily basis. Okay. And you can see even here how well these resistance support levels work. Price comes down to 32.45, which was a support resistance level, already given to my clients at least 24 hours in advance. And then we have support down at 32.20, again, well in advance provided to my clients. And you can see how when price was testing 32.45, very good support until we could break that support, and you can then see how the market ran this price within this channel. That's why these are called channel break trades. It's a channel break strategy. This particular strategy is a scalping method within that channel break strategy. And what we do, again, there's your indicators on the resistance support levels. The next indicator are our trend lines, just to see on a scalping basis, are we trading with the trade or against the trade. Well, this blue line is our 5-minute trend line, and you can see here it's trending down. This orange line is our 1-minute trend line. You can see here this is also moving down to the short side. So we're scalping with the trend if we're going to try to short this euro dollar. The next indicator we use, again, these are free from your broker, are your MACD lines. Now I do have specific inputs that we use for the MACD lines to optimize the point of momentum change, and that's all the moving average, convergence, divergence really does, is tell us when we're getting a change in momentum. And here we're looking at a change in momentum as we're testing resistance to see if we're going to stay within this channel. And how we do that is we have a fast moving average. Our red line is our fast moving average. Our green line is our slow moving average. So we simply look for confluence of indicators, and we teach that more in our trade room as well. But more simply put, is you can just go through our scalping entry checklist called our rules of engagement. And you trade. First, you answer some simple questions. The more that you can check off, the higher the probability of a successful trade. So here, as we're testing resistance, we say, are we trading with the 5-minute trend line? Well, we've already established that. Yes, we are. Price testing known resistance or support levels. Well, here's our resistance. So we're testing resistance here at 32.50. As price comes down, it's going to break this as support and will become resistance. Then, is the 1-minute MACD converging at extremes or testing the zero line? Well, here's our MACD lines. Here's your zero line right here, right where the histogram is at. And yep, we've been testing this line. See, we're trying to break down short on this MACD line as well. So as we try to break down on the MACD, break down from the zero line, and are we getting is the fast-moving average crossing over the slow-moving average? Yep, we've already established that. Red line has already dropped below the green line, and we're starting to get divergence. And here again, they converged, getting divergence. This all happens as we're breaking through this resistance support level at 32.45. So this tells us that we have momentum to the short side. Current momentum on a 1 minute. This is a 1 minute time frame. Current momentum says we are momentum-wise. The market is trying to short this euro dollar. So we know that now we have resistance support. So we get into this trade at 32.45 short, and with our stop loss at 32.56. Here's the live trade call at 32.45. Here we enter the trade, and we put a 10 pip stop loss. It's all we ever place on these scalping trades. And then we allow the momentum as we get divergence here. You can see the fast moving average separating from the slow moving average. So we have divergence. As we have divergence moving short, price also moves to the downside, moves short, where we have an opportunity to take our first 10 pips off at 32.44 and move our stop on to break even. So I take 70% off here. See here, 2/3 off at 32.44. There's the timestamp, and then we move the stop to +1. All right. So price does turn here because look at the MACD lines. MACD lines also turn. They went and all of a sudden turned long. So that tells us now the current momentum is turning, and so we bottomed out here at lower extremes at 0.04, and price did turn to come back up to test the zero line, or the momentum turn to test the zero line. So we allow price to come back up. We get stopped out on our small position that we have left at +1, so that's okay. So we capture 11 pips on that trade, and then we just allow price to continue to move until it comes back and retest resistance again. 32.45 now was support, becomes resistance. As price comes up and tests this area, so you can see the value of these resistance support levels, how well they work. And so we just now wait for price to come back up, test that 32.45 area. At the same time, we talk about our confluence of indicators. Look at our MACD lines. MACD lines are coming up just above the neutral line, and there's our crossover again. So we have momentum again turning short above a predetermined resistance at 32.45, and we have our moving average lines just above our MACD lines just above the zero line here, and turning down, going to the short side as we're testing resistance. So we're hitting a ceiling, and we have the market saying that we have more sellers coming in than buyers coming into the market. So momentum here starts to take this price short. Momentum's moving short. We have that good divergence here with the histogram. Look at the bars developing on the histogram here to the short side. So here we get into this just as we start to short underneath 32.45 resistance. We get in at 32.42 with our stop loss at 53. So we're taking our 10 pips plus our spread as our stop loss initially. And we then, as momentum shorts, there's your divergence still coming down. We can see that price also again moves right down off of resistance, and this time we allow this to continue to move and take 12 pips on this trade. Initially, we take 2/3 off. Here's the timestamp on this as well. Now we take 2/3 off at 32.30 and move our stop to +1 right here. Okay, and in this case here, we still had momentum to the downside, and price moved back up. But you can see here MACD starts to pull price back down again, and there goes price right to 32.20. Now we got out at 32.20 just to be able to get our 20 pips on that trade. However, you can see where the market took price right to support, predetermined support here at 32.20 at the right down here. 32.15 is where price stopped and ultimately turned back. So we're just trading between resistance and supports here, allowing the market to tell us when we're going to likely to trade within this channel. And that's why this strategy works so well, because we can trade within a range or within a channel and scalp that real easily, just watching our MACD lines as we watch our confluence of indicators. The key here is knowing where your channels are going to develop, where your ranges are going to develop, and that's what I provide to you every day. So that's that trade. That ended up being a 33 pip total with those two trades. But again, feel free to come to our website at salvationtrading.com, and there, if you have not you can join us for a 10-day free trial where you'll be able to get into all the live webinars that we have the first 2 hours of each market session every day, where I provide training, trade setups, and take live trades. If you go to our website, you'll see a complete detail of all the trades that we took this week that have all of these 11 trades on them, and you can see those in detail. And if you have any questions, please feel free to leave me a note on the website, or just request the trial, and we would love to have you in our trade room. So again, this is Wolverine with Salvation Trading, saying trade safely. God bless, and we'd love to see you in our trade room anytime. Please join us whenever you can. Thank you for your time.